It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, January 6th, 2016. Cruising our way through this first full week of a brand new year, 2016. By the way, if I haven't said this to you yet this year, Happy New Year. Hope everyone out there is doing well. Always a little bit of a transitional week, Boy, we're definitely feeling that right now in the markets. A lot of volatility, a lot of chaos every day. That's why I always say, turn off the news, minimize down Bloomberg, and focus on those charts, because the charts are telling us exactly how to make sense of this crazy, chaotic start to 2016. We get a jam-packed newsletter in store for you. We get strategies for crude, S&P, gold, and the euro. Starting out with crude. Crude is bearish with a spike in channel and a bear wedge this evening. This tells us to look for selling opportunities, but after a bullish correction tomorrow. Really a very similar scenario tonight as we were 24 hours ago on crude oil. We got a plan for the oil market tomorrow. Even the S&P is trading inside a range. We have a bearish bias on that range this evening, which tells us the sellers will be looking for buyer failures up at the highs. But if the bulls can hold, we have a gap fill back at 2012 tomorrow on the E-mini. We get a plan for that in a moment. On the gold, the yellow metal is bullish this evening, but we have a measured move and 3 pushes into a bull wedge this evening, which tells us to look for a bearish correction to run some stops before this price goes any higher tomorrow. Gold is looking it's amazing. Gold is the best looking chart tonight. We're going to take a look at that in a moment. Euro is bullish this evening, but we're testing the base of yesterday's spike in channel, which means the sellers need to take control or the buyers will be hunting for new highs tomorrow. Remember last night we talked about that euro and we talked about how there was a big move up before they would even get a chance to test that spike in channel resistance. We are here right now. It's go time tomorrow for the buyers and sellers on the euro. Before we jump into our strategies for tomorrow, though, I do want to remind you guys, make sure you're watching this video on our trading blog here at sidewaysmarkets.com. Is a video, if you're watching the video right now on our YouTube channel, there is a link in the description of the YouTube video. Follow that link. It'll take you over here to the blog for a few reasons. First of all, if you're not an advanced member and you're not in our live trade room as a member here at School of Trade, I would love to invite you out on a free pass. Grab your free pass to attend our live trade room anytime this week. Upper left-hand corner, lower left-hand corner. Now you'll never have to worry about missing another newsletter ever again. All I need is your name, your email address, and then make sure you check your inbox to verify your registration for our nightly newsletter mailing list. I'll send you an email every night when that newsletter goes live. Right below the video tonight, you can download all the charts you're going to see me using in tonight's video. That's right, you can download those charts. Just follow that link right below tonight's video. And then over on the right-hand side, you can register as a trial member to learn more about the actual strategies that we use here at School of Trade. You can learn more about what it means to be a member. And don't forget, no question too big or too small. I've always got someone standing by 24/7, 365 to give you guys any help along the way. All right, enough chit-chat, JJ. Let's jump right in. Tomorrow morning, we're looking at just a real light news day tomorrow. We had a ton of news that came out today. Tomorrow's a little bit of a lighter news day ahead of the Friday non-farm payroll report. We've got jobless claims. Tomorrow, Thursday, January 7th, jobless claims, pretty much standard operating procedure for a Thursday morning. We got jobless claims at 8:30. We got a Fed speaker at 8:45. All you natty gas traders out there have inventories at 10:30. But for the vast majority of us, though, we'll be watching the jobless claims come and go at 8:30. And then don't forget, tomorrow night we'll be talking about the very, very important every first Friday of the month, right? The non-farm payroll report on Friday. So looking ahead, tomorrow is going to be one of those days where we have to really be careful late in the session tomorrow. Watch the volume late in the session tomorrow, because typically what happens the day before the employment number comes out, the non-farm payrolls, remember guys, this is the biggest news we get Friday morning at 8:30. Now why am I talking about it now? Well, because tomorrow afternoon, you're going to see all the big asset managers, all the hedgers in these futures markets, they're going to start scaling out of their positions as they batten down the hatches ahead of Friday's major report. What that means is that tomorrow afternoon, you've got to be on your best behavior. I always tell people, No new positions after noon tomorrow, right? That Thursday before non-farm payroll Friday. And then next Monday, is going to be the reaction Monday. That's going to be the best day of the week to trade next week. Looking forward to more about that. We'll talk about that in a moment. But again, the rule of thumb for tomorrow is just make sure you trade around that 8:30 news. And then again, the cutoff is going to be about noontime for new positions, just because you got to worry about the afternoon session starting to get really very illiquid and real sloppy tomorrow as traders are jockeying for position. And of course, most important thing is the sharks enter the market and the elephants leave the market tomorrow afternoon ahead of the employment situation. We'll talk more about that in tomorrow night's newsletter. Moving forward, though, let's start with some charts here tonight. Crude oil. The black gold is bearish with a spike in channel and a bear wedge, telling us to look for selling opportunities after a bullish correction tomorrow. Very similar to yesterday's chart. We have a strong push lower with 3 pushes down, which tells us to expect the sellers to take their profit. The buyers will attempt to push this price higher. The key word there is attempt to push this price higher, right? You saw what happened in today's session. And the sellers will be looking for those buyers to fail on the next pullback for more opportunities to get short. Now, buyers, if you want to be a buyer right now, I know it's difficult for me to say, do you want to be a buyer in this market right now? Well, if you are a bull, and remember, this price can keep going lower. It can keep going lower. It definitely can. But if you want to be a bull right now, buyers can look for sellers to fail at the highs of the channel for a chance to run some stops back up to those resistance levels overhead. So basically, looking at this chart right now, we have a couple key components here. First of all, we have measured moves going lower. So if we do push lower, we have some definite support waiting for us down at this 33.26. That's one big important area of support down the downside. We also have another measured move support at 33.65. So we've got some key levels of support down here to worry about. If it does continue just to grind lower, just make sure you don't sell directly into support, right? Take your profit on your shorts into support. On top of that, we have our bear spike and channel. This bear spike and channel, you can see here, we talked about spike and channels last night, right? Spike and channels, they are strength patterns. And basically what that tells us is that the sellers will be in control ultimately all the way until we see a correction back at 35.58. So basically a spike in channel we have all the way up to that 35.58. And that's why, basically spike in channels tell us sellers have the strength, but with 3 pushes down, 1, 2, and 3, right? That'll be a third component on this chart. 3 pushes. The first push is the market makers. Second push is the trend followers. Third push, those are the late adopters, right? All the people who are just buying their first iPhones out there right now, right? Those late adopters, those sellers, that third push down. After 3 pushes, most markets are going to be starting to take profit. Sellers will take profit. Buyers see this as well. So we do expect this price now, right, to push higher off of that, right? Very similar to what we saw last night, right? Price pushed higher coming off the API news number last night. And of course, they couldn't hold that pullback, right? And price dropped lower. Fourth component that I see right now is this bearish wedge. Remember we talked about this last night in the newsletter. This is why it's so important to keep watching every evening, because we're going to learn certain topics, certain evenings, and then we'll readdress those topics as we go. What was the magic number on those wedges? We talked about this last night. 1, 2, 3, right? The magic number on that wedge is 3. And who remembers this is a bearish wedge? Who remembers what is the directional bias of a bearish wedge? It's a trick question, isn't it, right? It's not bearish. It's actually bullish. 3 pushes down into a bearish wedge right at the end of the little tip at the end here. Again, rinse and repeat from yesterday on crude. This is a very similar chart. And of course, we're expecting to see a bullish correction. Okay? So 3 pushes down into a bearish wedge. A bear spike in channel. All of it tells us here that we do expect to see a bullish correction, but do not confuse that for a bullish market, right? We are expecting right now the sellers to maintain control. So let's play that game. What if price rises? What if price falls? And we can play that game on how we're going to trade it. First of all, if price keeps going lower, we have to be very, very careful selling into support. And after those 3 pushes lower, we really got to be careful trying to sell into the low right now. The ideal scenario is going to be if price pushes lower, I really can't recommend you do anything with this if price pushes lower. If it pushes lower, what I'll be looking for is a fake break of that low, some running out of those stops, and then a push higher. Then you want to see that next pullback fail. Remember the old rule, guys. Remember, this is the rule that applies to everything. Buy low, sell high, right? I know this is a very simple rule, but if price goes lower here, you are going to be selling the low. You don't want to sell the low. So, okay, so what do we do then if we want to get short? Well, if it goes lower, what I would expect to see here is a stop run, right? It's going to run out the buyers. They're going to execute their stop losses. That will push that price lower, but don't take the bait. Wait for this to trap in those sellers and then look to fade that next move higher by selling into a failed pullback. Okay, so be careful if this price goes lower. The best scenario is exactly like we saw in last night's newsletter, where we jumped up, we couldn't hold the pullback, and that's going to be your best opportunity here to be a seller. But let's play that game. What if price goes higher? Well, if price goes higher, again, because we have those 3 pushes lower, because we've got those measured moves waiting to be tested on there, I'm highly suspicious now of that high. If you're a buyer, that's where you want to be buying right there, right? If you want to be a bull, that's where to be buying right there. The break back higher, right? You're basically anticipating sellers to enter the market at the highs. Those sellers are going to have their stop losses parked just above that swing high, and so that's where you want to be buying. And of course, you've got targets now waiting at the resistance areas up overhead. Okay? What I'm looking for now is I'm looking for, if this price goes higher, if I want to sell it, what am I going to do? I'm not going to take the bait to sell. I'm going to look for the next pullback to fail. Right? If that one holds, no big deal. We'll wait for the next pullback to fail. And on we go on the way up. I'm keeping my eyes peeled here. 34.63, 34.85, 35.14. We got a big gap to get filled all the way back up here around 36s. And remember, 35.58, that's the line in the sand where these sellers are going to have to react. So in my opinion, this price can easily go up as far as 35.58 before we even start to think about bailing on the idea, right, of fading those pullbacks. The rule of thumb right now is if it goes lower, be careful selling those lows, right? Wait for it to spike back up and then sell into that failure. And then as it goes higher, if you're a buyer right now, this is your chance here to be a buyer as those sellers try to sell, right? Just buy into their stop losses. And then again, if we do pull back here and that pullback fails, that's exactly what we're going to be looking for. I would anticipate, though, a little bit higher push here, just like we saw last night, and then look for that pullback to fail, and that's going to be your most reliable opportunity here to get short, and then look for targets back at the lows, measured moves here on the way down. And don't forget, we'll be trading this market live in real time tomorrow, so definitely come out and join me, and we'll take a look at that here in real time. Next up here, we got the crude. How about some S&P? S&P 500, the E-mini S&P. The S&P is trading inside a range with a bearish bias this evening, which tells us the sellers will be looking for buyer failures at the highs. But if the bulls can hold this, we have a gap filled, or a gap that's expected to be filled up around 2012. You can see it's kind of staring you right in the face up there. We started the session with a bearish spike in channel, but the sellers failed to give us any confidence when they retested that low, right? See this little spike in channel we started the day off? Looked very, very bearish here. We went all the way back up, right? Pretty much tested the base of that channel, pretty much par for the course, standard operating procedure for a spike in channel. And then, but this is where things are into problems here. What happened down here? No extension. What it feels like is, look at these candlesticks. Those candlesticks look wishy-washy. Does that look like profit taking? No, that looks like the buyers picked this thing up. And it looks like they're going to try to run and definitely try to get back to those highs, and that's where I see the big battle zone for tomorrow. This area between 2000 and 1995. Boy, that was a great year, wasn't it? I was just getting, just getting into high school. 1995, man. We started the session with that bearish spike in channel. The sellers failed to give us any real confidence, though, when they retested that low, which is now giving the bulls an opportunity to fill the gap above 2012, but they need to get through that range high first. Here's what I'm looking for. Okay, first of all, let's play that game. What if price goes higher? What if price goes lower? If price goes lower, I'm going to see this as a range undershoot. Now, remember that pendulum swing? We haven't talked about that since 2015, right? Remember that pendulum swing? Here's a trading range, right? They're going to try to run it up. If they can't run it up, sellers will attack, and they're going to go gunning for the next level. So if we go lower here, I'm going to see this now as a range rotation failure. In other words, right, we're going to see this as rotation from low to high, high to low, low to high, right, high to low, low to high. You'll have to go back to 2015's newsletters. Was the last time we talked about trading ranges. We haven't seen that in a while. I'm sure we will soon, though, here, so stay tuned for more in the coming days and weeks. I'm sure we'll have plenty of time to learn more about ranges. The bottom line right now, though, is if you've been following my newsletter in the past, you know that we expect range rotation. So if we go lower, that's a huge bearish clue. The only real problem is don't sell into that low. If we go lower, look for the buyers to try to buy that low, look to sell into their failure. And then we're going to be targeting that 1960 and that measured move down at 1953. We've got additional support here at 1949. So if we go lower here without revisiting that high, that's going to be a big bearish clue. Just be careful. Don't sell into 71.94. Wait for the buyers to try to hold it. And then you know where their stops are going to be, and that's going to be your objective, trying to get down to those stops and then finish off the move down to these support levels waiting for us below. What if it does go higher, though? That's what I expect. We do have an A, B, C, D measured move that puts us back up to the high. And again, really coming off of that really lackluster follow through after that spike in channel. It just feels like they've taken their profit and the buyers are using this as an excuse, right, to get a little bit of work done back to that high. We go back to this high now. Now we have range rotation. We're going to expect the price to try to rotate back down to that low. Now, because we have such a weak bearish reaction to that spike in channel, I always like to use failures on ranges, right? So just like I said before, if we go lower, don't just try to sell it, right? Look for those buyers to buy it, and then of course, failure at the low. If we go higher here, right, look for the buyers to try and then sell into their failure. Whenever we have a trading range, buy those lows, sell those highs, and use failures, right? The name of the game is failure patterns on trading ranges. Now, here's scenario one. If we push to the high and the pullback fails, that's our ability now to sell that high. But this is where the battle zone gets interesting. Because if we can hold that pullback, if the buyers hold that pullback, now we have almost a given. These buyers are going to run this back to fill the gap up at 2012, right? That'll be an open to close gap, right, on the dailies. So be careful here. Again, scenario one, if we go lower, very big bearish clue. Look for those buyers to try and fail down to the measured move support. If we go higher and they can hold a pullback at the highs, now we're looking good to go revisit those highs above. We go higher. If the pullback cannot fail, look for the buyers to fail. We're going back down to those lows, rinse and repeat. If we get back down to those lows, then we look to buy those lows, of course, and range rotation, right, continues. All right, guys? Remember the name of the game for failures, though, right? Failures at those range highs and range lows. How about the gold? Gold looks beautiful right now. Where was this all last year, right? This has always been one of our most chaotic markets, this gold market. It has a lot to do with the fact that the central banks out there are playing, Pinocchio with all of their Fed rates right now. But the bottom line is gold is bullish this evening, but look closely. Look closely. This is one of those easy to mistake markets. Yes, it is bullish, but just how much further are we going to get out of this? Gold is bullish this evening, but we have a measured move and 3 pushes into a wedge, which tells us to look for a bearish correction to run some stops before the price goes higher tomorrow. Think of this as a carbon copy, but the opposite of crude oil, right? It's almost identical, but the flip side, right? It's the opposite side. Now, hold on here. The most important clue will be the channel rotation up to the highs. If the buyers can test the channel highs before correcting lower, then we have a much more confident bullish scenario for tomorrow. But if they can't test those channel highs, then we expect to see the bulls take profit, and price will likely revisit some of these swing lows down here, trying to run out some of these buyers before making its next leg higher. Take a look at some of the components on this chart right now. There is no doubt about it. The bulls definitely had control today. We called that a mile away from last night's newsletter, right? We knew this was coming today. We've definitely have a big bullish channel. And with a channel, just like a trading range, we're looking for channel rotation, right? Think of just channel just like a range. Low to the high, high to the low, low to the high, high to the low. And then, of course, we're expecting to get up to that high. Now, this is really important. If we cannot get to that high, and if we go lower from here, now that means that we've undershot the high. We had a bunch of great questions today about this in our trade room. I think it was Kevin who was with me. It was Kendall today who was in our trade room asking about what's the best way? Boy, how do I remember that? That's good memory. But how do we know when we have an undershoot or an overshoot? An undershoot will be the high of a bull channel or the low of a bear channel, right? So because we're coming off that low, we expect to see price to finish the move back to the high, right? Now, that I think is the most important clue, because if we undershoot the high, if we go lower without testing that high, then all of a sudden now we have it ripe for running some stops and then fooling some of those sellers and then revisiting those highs here. Okay? First clue is a channel. Second clue, now we start seeing why we may not have that much more room to go. A, B, C, D, a major measured move, major resistance, right? Major resistance, that measured move. Then we have another very important clue. The first push higher is the market makers. Second push higher are the trend followers. The third push higher, right? These are the people like myself, right, who just bought their first time. I'm just kidding with you, right? Those are the late adopters, right? Everyone's talking about that movie on Netflix right now, Making of a Murderer. Yeah, I still haven't seen it yet. Don't ruin it for me. But the reality is, though, everybody who's late to it now, that's that third push. Now look closely. What are you seeing with those 3 pushes? It's starting to flatten out, right? Isn't it starting to be a little bit of an inverted cup, right? So it's starting to roll over. See how it's not getting as looked very strong here. Now it's starting to get a little bit shallower. Now it's starting even to shallow out, right? Man, that's not a very bullish clue. And when we combine that with the measured move, the 3 pushes higher, again, I can't predict tomorrow, but what I can do is I can tell us where the most reliable opportunities are going to be. Now, with that said, what's the plan here? Let's play what if price goes higher. If price goes higher and we finish the move to the high, now we're simply looking for opportunities to buy pullbacks, and we'll continue to use this channel. The real big clue, though, is, and what my gut tells me is probably not going to happen, is we're not going to reach that high. Okay, if we go lower here right now, that is not the pullback that you want to be buying. Okay, we're going to expect now to see a run to try to run out some of these stops here. So what I'll be looking for tomorrow is if we can't get the channel rotation completed, expect price to go down, run out all the bulls who are holding their positions, make them get back in, But here's the good stuff, right? Now, what's going to happen if it goes lower? If it goes lower, there are definitely going to be some sellers who are not seeing all of this. And they're going to try to sell that next retracement to try to fill the gap target down at 1078.3. And they might be successful. But the most reliable opportunity is going to be, for the bulls at least, if they're unsuccessful. Let those sellers try to sell it, and you know what I'm going to say next. If they fail, now we try to run it back up to the high. And what I'm going to do is I'm going to use this wedge. We'll use that for the target, right? See how easy that is? So I have a tough time to tell you where that target will be tomorrow, but use that wedge because the later it happens tomorrow, the more potential we have, right, to keep on pushing higher. Okay? Scenario 1, we complete the channel rotation. That means keep rocking, right? Keep doing it. Keep looking for those pullbacks back at that channel. If we don't, be ready for stops to get run at these lows. And again, if you're going to be a buyer without getting the completion of that channel rotation, my guess for tomorrow will be the most reliable trade will be buying into seller failure as those sellers try to sell that next retracement. Now remember, if the sellers are successful, they're going to be gunning for that gap fill, right? That gap support down here at 1078.3. If you're going to be a seller tomorrow, just make sure you take some profit at these areas of support. And in all reality, you're really going to be careful because that final gap support target down at 1078.3 is going to be staring you right in the face if you're a bear here with me. All right, guys, that does it for the gold. How about the euro? Now, the euro, it's crunch time here. It's go time here for these euro traders. Euro is bullish this evening, but we're testing the base of yesterday's spike and channel. I told you guys it was going to be a big move up before we even get a chance to test that spike and channel last night, and that's exactly what happened. So buyers have control this time, but there's a lot of resistance in this area. We have the base of yesterday's spike and channel. We have a measured move completion. Heck, if you even look even closer, there was major news that came out at 8:30 this morning, right? That's a carbon copy 100% extension of that major news candle. Get a lot of resistance up here right now. A lot of reasons why buyers should be taking their profit. We'll wait and see. If the sellers want to take control, they need to make a new lower low and then hold the first pullback tomorrow to send price down, back down to that 10,728 down here. Okay, if the buyers can hold the next pullback, then they push higher. It'll certainly run most of the bears out of this market, and we have a gap to fill back up at 0846. Right? Let's play that game. What if price goes higher? What if price goes lower? If price goes higher from here, you can pretty much guarantee we're going to hit that 84.6, right? 0846. We're going to fill that gap that's still left over from the end of the day 2 days ago, right? Monday's close. What I'm expecting to happen here, though, is to see this price pull back. And that's where we really are going to see, that's really where the battle zone comes in, right? So price pulls back right now. If it holds the pullback, we fill that gap up top there at 0846. If it can't hold that pullback, yeah, you know, that's where the easy money is. You know where those buyers' stop losses are going to be, and they're going to go gunning for the completion of that spike and channel target all the way back down. If you're a seller, this is what you've been waiting for. Just stay a little bit more patient. Wait for the next time the buyers try to hold that pullback. You know where their stops are going to be, and that's going to be the juice you're going to need to get into that trade to sell down to complete that spike and channel target, which we talked about last night. Buyers, if you can hold that pullback right now, now we know they're going to be showing that strength, and they're going to try to finish up that gap up at 0846 in tomorrow's session. All right, guys? Now, if the bulls are successful, keep an eye out for a larger measured move tomorrow. If the bears are successful, all we know right now is we're going to test that 0728, right, to finish off the spike and channel for that seller target tomorrow. Guys, that'll do it here for this newsletter right now. We got a plan for the euro. We've got gold, we've got crude, and of course the S&P. Before I let you guys go tonight, though, as always, I want to thank you so much for your time. Thank you, by the way, for sending me all your feedback to jj@schooloftrade.com. Thank you for giving me a thumbs up on the YouTube video. Thank you for sharing this video with another friend of yours on the interwebs. And again, while you're here, stop over to schooloftrade.com, register for your free trial. If you've taken the free trial in the past and you'd like to get a go-around again, I realize sometimes life gets busy. Contact the office. I'd love to give you the shot to run through our free trial. That way you can learn more about the actual strategies that we use in our trade room. And then, of course, don't forget, we have a level of membership for everyone here, beginner, intermediate, and advanced. And I always have someone standing by 24/7, 365 to give you guys a hand. Guys, feels great to be a trader right now. Lots of volatility, but again, I can't emphasize this enough. Turn off the television, right? Put the news media on mute and listen to that chart. The chart is what makes sense right now. It's the easiest way to do it. And in all reality, it's the only way to keep your sanity in this crazy world we live in right now. Guys, I'm out of here for now. My name is Joseph. Contact me in the office for more information. Tomorrow morning, we open up our live trade room with members at 8 a.m. Eastern Time. And you know how we roll. We'll come back and do it again one more time tomorrow at 8 p.m. Eastern Time, Monday through Thursday evening for our nightly newsletter. Get out of here. Rest up. Refocus for tomorrow. I'll see you guys tomorrow. Adios, amigos. Bye-bye for now.